The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, DavidWhite. Now, the author of The Path of Least Resistance and the Tech Insider, DavidWhite.
And welcome all to another gorgeous day at the headquarters of technical trading and investing. It is TFNN.com, and I am your humble but lovable and squeezably soft host, David White, for this hour we call the Power Trading Hour. And it's an hour, so I think that works. I think that's probably good to call it out. If we called it the half-hour, probably wouldn't work as well, being it's an hour. So anyway, now that we've got that all cleared out, we're ready to start taking a look at some markets and the way they're moving. Right now, what are we off? Half a point on the S&P cash. We're up 5 points on the Dow and flat on the NASDAQ. And see, let's take a quick look here. See if, come on, system is running slow out here. Volume is 1.88 billion shares as we start this show on the consolidated New York Stock Exchange tape. What does that mean for us? Low volume, folks. If we get into the end of the show with less than 2.3 billion shares, it's going to be another low volume push down into this market. Part of this, I suspect, is the lead up to the FOMC meeting. I think we're going to have a very, very light volume Monday, vapor volume on Tuesday, and vapor volume on Wednesday till about 12:30, when we have the FOMC meeting come out. At that point, I expect the market to start a slow melt up into the end of the year. So you probably have the rest of the day, maybe Wednesday of next week, where we're going to have some significant movement, and that's probably it for the year for big movement. Probably still good movement in some of these other markets, namely commodities. Probably still see some decent movement in some of the markets like natural gas, crude, and gold. Gold right now up $8.90 at $12.33.80. And as we look at the rest of the market, just not a whole lot going on out here. I think we've gotten a lot of positions set up for the FOMC meeting next week, and at that point, pretty much going to be what we see for the rest of the year. Always light trading, of course. Today in financial history, in 1961, the end of the longest bull market on record, at least for the United States, began on June 14th, 1949, finally ground to a halt. So some of these things do last a while, almost 12 years. The Dow Jones Industrial Average peaked at 734.91. It was up almost a point that day, and 355% for the previous 12 years. Within 6 months, the Dow will bottom at 535.76, a 27% plunge. So we're no into seeing that the way up is on the stairs and maybe even an escalator sometimes. But that's one floor at a time. Then you got to walk around all the way the other side, get on the next escalator up, and probably did that for a while. But always the way down is either on an elevator or off the top of the roof. 6 months basically took away 27% of that move up, and of course a lot of that 27% was in the last year and a half. But they had days not much after this that everybody came back in and started selling heavily. I'm wondering if this isn't a homage to that 1961 date when we started seeing the market move. Now, we've had some pretty big movements in the markets today. Let me get a current quote, and Darko, APC. And what do we have in this is, it was off a lot more. It was down to $73.55. Anadarko Petroleum Corporation. Now, what is that they did, and it's pretty cut and dried from the record, was that they had a company that had been making a lot of paint with toxic materials, and they figured out that the feds were going to make them clean the thing up. The cleanup cost was going to be, or is going to be, somewhere between $5 billion and $14 billion. So they pushed everything into a sub-company and spun it off into that company and said, well, you know, you guys get all the bills for that. Of course, what happened? The judge said, I cry bovine excrement. There's no way that you can just shove all your problems away in a separate company. This judge is Alan Grotner. I read a little bit of the ruling. Said the damages would range between $5 and $14 billion. But they actually, there's a legal term. It's called intent to hinder when they spun off Tronox. And this paint materials company later went bankrupt, but of course leaving only the government to clean things up. And a fairly easy way to go through that. Stock's probably up a little bit on the fact that, and only down $5 right now, or a little, almost $6, because they figure that they're going to appeal this, and one day they will have to pay it. The question is just whether or not how heavy the sanctions will be if they continue to fight it. It looks pretty cut and dry. These guys are as guilty as can be on this deal. But take a look at it. Flood insurance rate increases, especially people in Florida. Only heard this discussed just a very little bit yesterday, but it's going to have ramifications all over the country. Anybody that lives on a Gulf coast or on the waterfront by the ocean is going to have problems. What happened is there's, of course, a lot of sniping back and forth, but there was a, or is a senator from Kansas who kind of got screwed over in the Missouri flood of the river. Not only that, but he doesn't quite like the way that the current Senate president has decided to change the rules. They are basically going to go around and become very obstinate about getting anything done. But what they did yesterday was he blocked the bill by objecting it had not been vetted in a committee before coming to the Senate floor. If anybody knows anything about their civics lessons, probably not if you graduated from school in the last 10 years, maybe even 20 years. I'm trying to remember when they actually taught physics. And not that, I'll get into that later, or maybe not at all. But anyway, if you know civics, this is a procedural rule that the committee has to at least take a look at it, investigate, possibly have committee hearings on it. If it is by consensus that no one objects, it doesn't have to go to committee. Well, all he had to do is object. And as they say, the Senate is the place bills go to die. And probably a little bit of sticking it to the man, old Mr. Reid there in as the president of the Senate. But it is, what can I say, a little bit of payback. Let me put it anyway. But anywhere, everywhere along the coast from New York City, these rates can skyrocket up to tenfold. In fact, there are some people here in the county that we're in right now, Pinellas County, saw flood insurance premiums jump from $4,000 to $44,000 on these new rates. And I'm thinking that they will eventually sort this out. I'm going to probably talk to Tom about this between the 3 and 4 o'clock hour before we come back at 4 for the Tech Insider, but I'll get his take on it. But I suspect it's going to be handled, but in the meantime, probably not going to be a lot of houses sold on the water in the next couple of months until they get this ironed out. I know it is a big issue for people living down here in Florida and all along the Gulf Coast and on the Atlantic side of the country. But keep an eye on that. That may be the biggest thing affecting the housing market in the coming year. Yes, I did say $4,000 to $44,000, and this is not a first-time thing. Tom and I were sitting, strangely enough, in late 2001 or early 2002. I can't remember exactly what it was, but we were talking up at the Beef O'Brady's that was just up the street from his old office. We were talking about something, eating lunch, and we were talking, and I said, well, I'm kind of getting ready to sell my house. And he says, well, that's probably a good thing. We talked a little bit about it. He talked about all the boom-bust cycles that he'd seen up in Boston for home pricing. And we debated the reason that the market would start to die here in Florida. And, of course, at that time, we really had not any real big idea that it was going to be a national housing crisis. But we talked about how and why the market would crack. My bet was on the insurance. And after I just a couple of months after I'd sold my house, we had the big storm come in here at Fort Myers. And my house insurance down on the beach at that time was pushing about $4,600 a year for what they call wind and storm damage, basically hurricane insurance by the state here. And I'm talking to the new owner. He basically said the same thing. His first quote out that year until they got it fixed yet again in 2004 was like $40,000. So he had pretty much the same kind of thing. We can see 92 is Andrew, correct. That was down in Homestead, which is on down just south of Miami. This one was the Fort Myers one. And strangely enough, a couple hours south of Tampa. I'd say that good, yeah, 2-hour drive. Venice, Fort Myers, all those areas just south of here. But that's where it hit. And in fact, I had come down, the ex-CEO of our company, got president, I guess he was president, of a company, moved and retired there. And he used to always have me take him and a lot of his buddies down in his big, fat, big Carver Cruiser, a 60-footer. And he was in his 80s already, I think, at that time. But I remember we got back the day before that storm started blowing in. I made it in there about 30 or 40 minutes, and my flight took off back to the Midwest about 40 minutes before they closed the airport. And it came right back in. But anyway, we will be back in a minute, but just keep an eye on those things. But I think we're going to start hearing some people scream. You can give me a call, 877-927-6648. That's 877-927-6648.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We're going to take a look at Europe, FTSE, all these pretty much off 10%, pretty light. Not a lot of movement out there. Greece probably the worst, 2.5%. Kind of tell you what you're looking at. Interestingly enough, we've been talking about companies not making any money. And when you start seeing these kind of things show up on the Drudge Report as the headline, you've got to start taking notice. Anyway, the Drudge Report did have a headline up for most of the day about a $26 billion value for Twitter with no profits. And, of course, news out today drove them up to about $58, trading back down in the low 56 range right now. But even some people are starting to take notice. What drove the Drudge Report today to actually report on this was our friend Kramer saying that you shouldn't just pay any attention to the fact that these companies make no money, haven't made any money, don't plan to make any money. They're going to be loved, and if you need to be in them, and quit hating them. Quit being a hater. Quit being jelly. Can't be jealous. Can't be haters. Every stock that I've ever seen through history that made no money eventually died a horrible death. The idea is always it's going to be different this time. It's been It's different this time because it's a dot-com craze. We've got a whole new paradigm. There was always some BS description of why it was. And the housing crash, and even now, it's the government is basically underwriting everything. They can print money, so it's never going to go south. But kind of interesting that we are seeing that kind of movement, of course, and Twitter coming off those highs. But just a thought. Of course, as a true sign of global warming, Cairo had snow for the very first time today in 100 years. Snow coated the domes and minarets Friday as a record Mideast storm compounded the suffering of Syrian refugees, sent the Israeli army scrambling to dig out stranded motorists, and gave Egyptians a rare glimpse of snow in their capital. First time in 100 years, and we know that's because of global warming. Of course, if we had seen a storm, a hurricane, it would have been because of global warming. So if we see snow, it can be because of global warming. I really don't know whether we have global warming or cooling. I do know that anecdotal evidence like this is, for the most part, meaningless. If it snowed here 100 years ago, probably tells you that weather has extremes over lots of years. But 100 years ago, didn't have a lot of cars on the road. Weren't burning a lot of stuff. But who knows? And I'm going to talk a little bit more about this tonight. AT&T has come out and talked about the end of subsidizing phones. They are starting to move with a plan. Normally, they were pushing a lot of iPhone upgrades. Now they are pushing a plan to upgrade your $500 phone for, normally for $200. AT&T is offering cheaper plans instead of those upgrades and really pushing those as of the last 15 days. They're trying to lengthen the upgrade cycle from the traditional 18 to 24 months to 3 years. And we'll have to see how that's going. But both Samsung and Apple hadn't said anything. Samsung has. Samsung said that this is pretty much the top of the bell curve. The early adopters are out. Now we're into the mass market part of this. And they're saying that from their numbers, not only their top-end phones, the Galaxy 5s, but Apple's 5S, that they're saying don't expect a lot of growth from here. That they think that the top of the superphone market, the most expensive phones, is probably in. AT&T may be looking at that market and thinking, hey, this is the top of the market. Now it's time to go after the price-conscious and sympathetic customers. But fairly interesting to me. As of big movers out here today, we do have Adobe, ADBE. As symbol, this thing rocketed out. They've been making a transition from a traditional software model where you buy the software and you come back and buy it. We're going to talk about that transition to the subscription business that they've had and why they have a lot of people moving with a lot of volume today, the stock higher. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back here, I'm going to have a great rest of the show. I demand it. I demand a great rest of the show. Anyway, we were looking at Adobe Systems when we left. I wanted to talk a little bit about why this thing's taking off today. They had been pushing a subscription business and a way to keep more customers in the boat. Probably a good description of this is Word from Microsoft. I continue to use Word 2007. Of course, fairly expensive to upgrade that, but I paid for it and it works fine. But what they are pushing is a deal where you're always going to have continuous upgrades to the product, and they'll automatically download as long as your subscription is valid. Now, not a big deal probably in Word, especially there may be some new things going on. They've got some newer versions. But for Adobe Systems working in graphics, there's always higher resolutions. There's always new effects, like After Effects is one of the programs they sell. A lot of new stuff coming along, and pretty good business to be in. What they found out, though, is that the continuous refreshment of their software was wearing on a lot of their customers, so they decided to go with a slightly lower price, but sell everything at a subscription model. So as long as you're subscribed, you're going to be getting all those new features every month. And overall, it's been much better for them, even though they were guiding down. What most people are looking at is a better mix of what's going on, and that mix is that they were retaining a lot more people at a lower price. And I think what happened also is a lot of people were expecting this to fail and had been on the short side of the stock with limited volume today and a limited range in the price of the stock. A little bit of good news, a lot of short squeeze on this. You really needed to come out with some bad news just for the shorts to probably break even. And I think we're probably going to look at a very minor version of this next week, i.e. we're probably going to gap up on the 18th at 230, and it won't be a whole lot. We're going to drift up to 1,800 on the S&P cash and probably above 4,000 on the NASDAQ, and we're probably going to drift up maybe a high of 1,825 by the end of the year, something like that. It's going to be very tough to make money outside of the commodities sector. Of course, we did see a little bit of pop in gold. We talked about that, up $10 today. Of course, crude off a bit also. It's down 77 cents off a recent high at $96.75. And we're seeing some other things push a little bit. UNG, kind of interestingly enough, we'll look at that. Of course, this cold weather is going to fade a little bit, but you did break these previous levels, and you wanted to see this thing go through volume higher than 5 million shares, at least on UNG, and you got 5.4 million shares after it broke through, but not as it was. 6 million shares a couple of days ago, and fairly light, 13 million shares up here at the high. Looks kind of like we're going to have that as a high for a while back here on the 12th yesterday. So keep an eye on that. What we want to watch for is a pullback, at least on the UNG, just under the $20 range, and see whether or not you can get a floor in this market. There's still a huge excess supply and production of natural gas. The question is just how fast this is going to come back down to that $20, just a sub-$20 level where support should be, and whether or not the winter continues to be cold up north. Actually, it was cold today. So I think I woke up, it was 65 or 66. And still cool down here at the headquarters of technical trading and investing. What else did we have out here? Twitter, APC, Adobe. Electronic Arts. Wanted to take a quick look at that and see how it's doing. Electronic Arts kind of missed the big upgrade cycle with PS4s and Xbox Ones. I think that's why they've been kind of selling out here. I think they're going to catch up. They're doing a lot of work on both those platforms, and I think you're probably going to see games out for them in the spring. Of course, they tend to do a lot around baseball and football times, and you're probably, a couple months away from launching their big baseball title. Of course, the golf games and some of the others. But EA Sports still a big part of that. And I think they're just a little bit under the afterglow of releasing the latest football game, and probably a little bit ahead of releasing their sports games. But they're going to get out of that as their major driver and get back into a lot of other big ticket games that we've seen from like Activision and those companies. But not a whole lot out here. It's just bounced up. Did sell off of that high. When we look back at the market, it has been weakening as we've been in the show here. Let me update this just so I can give you accurate numbers. What do we have? There we go. And we're off $1.33 on the S&P cash. 2.06 billion shares. As again I said, we kind of drove down to a lower level. You pretty much had to look at 1778 as the level that you didn't want broken on the S&P cash. that we're just a few points underneath it, and light volume makes me think that there's just not enough time and juice left in the end of the year to really get anything going. I certainly think that we're going to see a great deal more pushing at the beginning of the year, and pushing, I mean pushing down. So I'd love for this market to go back up on extremely light volume into the beginning of the year, and I suspect we're going to be looking for that. The Tech Insider comes out every Friday. I have a daily newsletter that comes out twice a day, kind of a little recap at the end of the day. But in the Tech Insider, I have not liked the odds of a lot of the things that we were looking at. And if you look at the vast majority of tech stocks, with the exception of a few companies like Adobe, haven't gone anywhere. I actually put in my first new buy, go long, today. And you can always check that out at TFNN.com. Go to the front page and check out newsletters. And if you've not tried it, you can try it again. But I have a new stock, and I don't know if it's new. I talked about it a while back, but I've been waiting for this thing to line up, and I think both international and local and a lot of other factors are lining up to set up a good trade, and technically looked pretty much where I wanted to be buying it. So a first day buy in about 4 weeks. I haven't found anything I truly liked that I wanted to hold more than a day or two or three. But I'll take a look at it. Let's see. I got to take a look and see how it's doing right now. Yeah, getting a good buy on it. That's good. Put it in a buy, and yeah, I think you're probably getting fairly good. And it's testing a low on lighter volume. Okay, now let's go look at some other stocks. We've been following Netflix and FLX since I called the 3-gap play on it, looking for a little bit more sign of weakness. We're certainly back into the huge day that it went up, October 22nd, with 25 million shares that day, in very, very light volume out here, 1.8 million shares. A little bit of afterglow the last few days about looking at the Golden Globes and some of the other award shows coming out on Netflix. But boy, we're certainly getting awful close back into a double top. And we are at 25 million shares for that blow off top, the 3-gap play. We got up fairly high today. This thing's a little bit rolling over, but don't think we're probably going to have a play on this before the beginning of the year, but another one to keep your eyes on. Of course, we've been talking about 3D printers before 3D printers were cool, and some of these stocks are getting very close to sell signals. What we have in 3D systems is the November 18th high at $84.85 with 10 million shares. The best we've been able to get is 6 million shares as we come back in here. This would be a classic double repo pattern if we get one more close below the 3x3 displaced moving average. You can also try this with the traditional 9-day moving average, which is just about the same thing. But one more decent close below the 9-day moving average, and you would probably want to be out of the way of this stock. Of course, we caught a short on X1 fairly decently, one on VoxelJet, and now we're getting the reaction to those huge moves. And we'll take a look at those real quick. X1. Now, you know, this one looks like it wants to come back and test the low of $50.55. That's on X1. And do I still have it here? They threw it away. I used to have a piece. Let's see if I've got it here. Yep, still got it. When they went public, sorry about that. They do a lot of work with sand castings. Actually, I have a piece, if you're watching on Tiger TV, that they sent me when I called and asked about some of their technology. But this is a hard piece of sand put together with what the equivalent of about hairspray. They do a lot of large format sand casting metalworks. But interestingly enough, of course, the one that everybody likes to talk about is a VoxelJet, the V-Jet, mostly because this company had such a run with $14 million in sales. I covered it extensively in the Tech Insider and had a short on it on this huge move down at about, $67. We got darn near all of it. I think we've covered it at $40. But very interesting stocks when we see very light volume. They were on CNBC, I think last night, the night before. Someone in the den was nice enough, I think it was Z, to send me some discussions that were on 3D printers this morning on Bloomberg. Getting a lot of play now and a lot of analyzation. But everybody agrees that this is not different than a lot of other sectors that has extremely overrun their forward-looking potential. And it would be nice to have these things really pull back, base out for a while, and get ready for the next run. I personally think that the majority of the money in these 3D printers for traders, at least huge multiples, is probably going to wane a little bit. The big money, and I cover it today, are new techniques and new things that they can actually print. And there is a new specialized metal today in my Tech Insider that I talk about. And a lot of these things are not only going to be better and new techniques that no one else does, but the technique and the metal coming out today would cut a very low weight, high strength metal by about 75%, excuse me. And I think you want to be looking at maybe more of the periphery of these companies now instead of the companies themselves. So people that supply specialty plastics, specialty metals to be printed, and things like printing food, which is a big deal. So, okay. But that's 11, 12, 11, 12, 2. Okay. So, let's see. I'm just looking through some stuff here real quick, making sure I catch up. But anyway, one to keep a close eye on. Have you speak, Rover? I have no idea what everybody is going in. I'm just kind of trying to watch a market that is kind of a little bit flaky here and see if I can bring anything up. Anyway, those are a couple of companies. Let me see if I can get back to the other ones out here that are moving. OPK. We'll be looking at OPK when we get back. Not good. OPKO Health. OPK. Having a bad hair day. We're going to look at this thing, but hitting and breaking the previous lows on fairly light volume. We'll be back in a second. Still have time to give me a call, 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
DavidWhite's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage of TFNN.com to sign up for this once-in-a-lifetime opportunity.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come through, we're going to look at this one, which is OPKO Healthcare. Let's get the profile up and running on it. But interestingly enough, not a lot of stocks moving out here, of course, today. But this one down more than most. This company, pharmaceutical and diagnostic company, engages in the discovery, development, and commercialization of novel proprietary technologies. Operates in 2 segments, pharmaceuticals and diagnostics. So as we look out here, is interesting to see not a lot of volume. You had the big volume yesterday, a little bit of follow through today. Certainly looking at the previous November 19th low, $9.36, 4.8 million shares. Coming into that with 17 million shares yesterday. Probably a little bit of an exhaustion move, but I'd look for this thing to go back after this September 20th low, $8.23. Looking kind of quickly at a few of the gold stocks and seeing what we can on a light volume Friday. Up a little bit today on gold, of course. But when we look at the ETFs, not a lot of buyers in here. Maybe 5/8 the volume so far that we had yesterday. So maybe we'll get 3/4 of the volume. Starting to look like a scatter chart out here more than anything else on the GLD, but still have that nice low just recently at 117.23 to test, and then longer term we've got to get back down to this June 28th, 114.68 low. RGLD. And same thing on this one. You're just getting this big move out with light volume back down to these lows. Royal Gold's got that June 26th low, $38.63, 1.9 million shares. And this one, even a lighter volume, going to be a negative candle on the day for Royal Gold. Let's go back real quick and take a look at the markets and how they're moving. Let me get back here just a second. Got so many screens going on here. Well, according to this, we are flat on the S&P. We're up 2 points on the NASDAQ again today and 20 points higher on the Dow. As we get into the end of the day, I suspect we had a lot of shorts hopping on early in the day. Probably going to see a few of those blink as we go into the close and see maybe just a slightly higher open. And, of course, almost no volume throughout the store, throughout the show. We saw, 1.88 or something, 1.85 billion shares as we started, 2.15 billion shares on the consolidated New York Stock Exchange tape. What you'd really like to see is 3.5, 4 billion shares. We got 3.5 billion on the heavy day down, but nothing really to follow through since then. And you kind of have to think that more than anything, the seasonality of these charts is what's going to be pushing this for the foreseeable future. Again, I'll be on at the 4 o'clock hour. We'll be talking technology with Tom O'Brien. And we'll come on probably, 20 after the hour normally. We've got a lot of interesting things happening in technology this week. Some things that I think we might be able to start making some money on very soon. Of course, we take a little longer-term view in the Tech Insider, more of an investment letter than a trading newsletter, but we shall see. Anyway, if we don't see you tonight at 4 o'clock, we'll see you Monday. Same bat channel, same bat time. And I remind you to sell when you can, not when you have to. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.